on, guys? Welcome back to the channel. Hope you're enjoying your weekend so far. Just kind of rolling out of bed, stumbling around, and looking for a little bit of entertainment. Well, I told you guys I would look into the options chain as far as Bed Bath & Beyond goes, see if there's anything that's looking like it's building up for a potential gamma. We'll look at the options chain. We'll see if it's there. We'll talk about a couple of ideas or theories that maybe could be an impact as far as what we're looking at, and we'll just go from there. But as always, this is not financial advice. I'm not a financial advisor. It's just for entertainment purposes only, so let's be entertained. So I was just kind of scouring through here, just trying to see what is actually building out. What are we looking like? We'll look at the calls. We'll look at the puts as well, because that's going to have an impact on us too. It's not an options class, so I'm not going to tell you how to play them or anything, but we will go over just a little bit of that information. So looking at what we have going on, I really look for the open interest column. I want to see how many people are interested and at what strike. How close are they to being either in the money or at the money? And what are they kind of betting on? Where are they putting their money, in what direction? And, are they lotto calls, or are they something that might actually have an impact to help with a gamma and push things in the right direction? So looking at it, we know a lot of this is probably retail right now, because we're not seeing crazy amounts of numbers that are coming into the options chain. If you're looking at it on the open interest, I mean, next week we have a little bit going on here, several thousand contracts, $5.50, $6 strikes. We'll see what they want to do. I can open this up even further if we want to see if there's any kind of lotto stuff going on. But I really care more about in the monies or at the monies as far as our calls go. So looking at next week, up to about $7 is where we have our best fill in so far, and then we start getting these little gaps. You can see the numbers really pull back. So in order for gamma to continue to run, all of the gaps really need to be filled in as best as possible, going up to whatever our strike prices are, just so that it's continued and we don't hit that lapse or that black hole area where the market makers hedging, if they are hedging, just kind of dies off on us. And then, it goes back to the heavy lifting of people that are actually throwing money buying shares at that point. And is there enough FOMO to carry it through these little lulls where you would have holes in the books? But looking at it, I guess next week it doesn't look great. I'm not telling you this looks great, but I mean, at least we have some numbers kind of dragging us up to the $7 range. What's the put side look like? So the puts, you got some pretty heavy open interest all the way down here at $2. I don't know if those will actually pull through for the put side, but you got about just as much pressure coming down on you on the put side as we have on the call side. So going to highly depend on, if money steps in and starts pushing it in favor of the bulls, or if it's going to just be sucked back here into bear territory favor. But that's going to be the first thing I'm watching, I guess, is next week. Which way are they pushing it? Are we headed in the right direction, or are we headed down? And then, as we continue to look out a little bit further, there's really not a whole lot that I'm seeing being played anywhere as far as the open interest goes up until, I want to say, January. So this is still, here's November 18th. 22s. We can see that there is some interest that's kind of piling in here around the $5 to $10 strike range, even up to about 12, and then you start getting your lotto calls that are coming in. Now, are they doing anything right now? No, they're not doing anything at all. The hedging is just not even there for those type of plays. But if they do go in the money, yeah, you're going to make some very good money. But chances of them going in the money, it's going to depend on how the play goes. And if you are playing those lottos, Uh, I guess there's nothing wrong with it as long as you're willing to roll them or just keep an eye on where your losses are actually coming in. Once you get down 25-30% on options, a lot of times those things just do not want to come back to life for you. So that's where you really want to keep a close eye on them and maybe say, hey, okay, this one didn't work out. Maybe I would want to roll that into either a longer dated or something a little bit closer to the money. But just watch how they go. And some of those lotto calls people just don't care about. If they lose a few bucks here and there or whatever happens, it's relatively cheap to play them. That's why people play them. And it's like, all right, I'll throw $6 at a $24 strike and see what happens. But as far as Gamma goes, doesn't help unless for some reason something crazy happens and they get up there. So really, December, how's December packing out? December, not too well at all. No, December's not looking good. January actually looks pretty decent right now. I like to see this. We're $10 strike. That's a double from here. So are they going to hit? Well, I have a video out that I put out maybe last week talking about time frames for Bed Bath & Beyond and what my expectations are. And I think I said even these December, Januaries may not be far enough out because that's just whenever we're going to start seeing the turnaround as far as Bed Bath & Beyond's game plan and starting to see it come through. So I'm thinking more Q2 of 2023 is whenever we're really going to see them turn profitable and turn things around if and when they're going to. So maybe this will be the start of it somewhere out here in January of 23. It is filling in better than what we have so far, and it doesn't have to run all the way to January 2023 for these people to make their decision. If they want to exercise, they can. Right now they're paying $1.50 roughly for the option, so they're needing $5 plus that to be able to get into the money. So they're not going to be exercising more than likely until at least the 650 range, and that's just to even break even on those. So we'll see how it's running, how it's moving from there. But if these start getting into the area where they could be exercised profitably, that could help push things along into that Q2 of 2023, which is what I'm really kind of looking for. So let's see if January wants to start making that ramp back up. How's the puts look for January 23? So on the put side, there's some heavy puts in here as well. Quite a bit of puts. So it's not nothing's guaranteed in the options chain, but we do have a lot on the put side, just as much, if not more, that we got going on for the calls. So we'll keep an eye on how that's going to move. What are the leaps looking like? Are we getting anything set up on leaps? April's, no, let's go further than that. How do I get into, there we go, January 24s. So January 24s, looks like some people are throwing down some money on some of these deep in the money calls, which, could work out. They could technically be profitable around, $5.50, $6, somewhere in that vicinity. So as of right now, those aren't too terrible. They're extremely expensive, but if somebody wants to roll that, they absolutely can. I would just keep a very close eye on those. It's a lot of money to be rolling out there for an option. January 25s, January 2025s. How are we looking there? So not a whole lot going on. Again, still, $400 for deep in the money. Being able to exercise that, they're looking for at least a 5.5, $6 by January 2025. So if as long as Bed Bath & Beyond survives, yeah, those could be nice long-term plays. I suppose if you're wanting to throw that kind of money down out there and tie it up just for the time being, but it's interesting. So what I'm thinking too, as far as the options chain, I think a lot of things are getting a little bit skewed right now because big money doesn't seem to really necessarily be hedging in the overall sense of the word. I think it's throwing off the VIX quite a bit as well. What I think they could be doing is just waiting till the last minute, throwing down either their puts or their calls, and then just playing their hand to get those in the money, right? So you throw down some puts, let's say on the SPY, $3 out, of the money, and then they just sell everything and they capitalize on that put profit, and then they'll buy the calls, $3 out the money the other way, and just slam all their money back in and drive it back up. It's making a lot of volatility in the markets, and I think that is kind of why it's giving us that extreme swings, is because if they were truly hedged and truly just doing what a hedge fund is supposed to do and make gradual money, then we would be able to see a lot more of this in the options chain going, either to the call side or to the put side. But I think a lot of them are just put heavy right now, playing in one direction and then just scalping in between, and until they see a true reason for there to be a turnaround in the overall markets, I don't know if they're going to truly be playing in the call options chain, throwing the money out there and trying to hedge anything if they know that they're short and they're profitable in the short thesis as of right now, and they can just keep, either hammering it down, or they can make those quick swings one way or the other to catch a little bit of profit to, either capitalize on their puts and then roll it back the other way for a quick buck, and capitalize there. So I think we're seeing a lot of pretty heavy manipulation with a lot of the bigger institutions and how they're playing their money right now. We wouldn't see them being down so much if they were truly hedged, but maybe they're trying to make up some of those losses just by doing short-term quick money grabs to a degree. So as of right now, Januaries are probably looking the best, and I just don't know if that will be enough time whenever Bed Bath & Beyond actually makes their turnaround. But I think right here is where it's filling in the best so far, is January 2023's. They're not cheap, and I think that's why we're seeing a lot of these further out of the monies, because that's either what people are willing to risk or that's what they can afford. And sometimes, that's when you get in trouble with options, is whenever you're playing what you can afford and not necessarily what could have a possibility of actually coming to fruition for you. So just continue to be careful and cautious. Options aren't meant to be diamond-handed. You need to actively be thinking about what's going on, how deep red are they getting, how far are you willing to let them get into that deep red before you want to start thinking about rolling them or changing something up just a little bit. Because if they get too far down on you too quickly, it's going to be a tough road to get back up and make those turn green and profitable. So just keep an eye on it. But like I said, as of right now, I don't think we have a whole lot of areas of gamma that are set up, but big money could just throw in at any moment, or news could come out and that would quickly change things. So just be checking back in on the options chain as far as every couple days or something. Just see if something's changing, see if something's looking a little bit more full. Because as of right now, I think it's just retail that are playing either weeklies or the next week out, just continuing to, roll those week after week just to see when and if this thing will take a little bit of a pop for us. So we'll probably see these kind of numbers roll into the next week's strike, I would assume, as we play out this coming week, see how all of this goes. Some of these people, you're down 40%, so they're getting cheaper if you're looking at them for Monday or Tuesday, but some of these will probably start getting rolled by people who are actually trying to protect their accounts to a degree. They don't want to continuously lose it. If you lose 10%, you can roll those things, and you can continue to play for several more weeks rather than watch it 50, 60, 80% or go to zero. That just wipes you out for that week. So it depends on how long you want to play, how you want to play, and totally your call. I can't tell you what to do. What I do have is I have a few weeks out. I think I have some 6 or 650 strikes, so I figure if it hits, awesome, I could exercise some of those, and if it doesn't hit, that's fine. I'll just continue to roll those out, a couple weeks. I'll just see how they play out, because I don't hate the idea of being in at 6 or 650 if it's going in the right direction, and then I can exercise those things or whatever. But I just continue to roll my options because I don't want to sit there and watch all of my money that are in an option play go to zero. But that's just how I play it. You guys are welcome to do whatever you want. Like I said, I can't tell you, but hope you're having a good weekend, guys. As always, stay golden and may your accounts stay green.